So, welcome back to Around the Block Volume 12 with myself, Philip Artis, and our resident crypto expert, Guilherme. Welcome back, Guilherme.
Hello, Philip. Hello, everyone. Thank you so much for inviting me another day to come here and explain a little bit about charts and crypto. Very glad to be here again, and hopefully, we're gonna have a great talk again.
Oh, yeah, we always do. And we have a
Yeah.
lot to talk about. There was a lot of red in the market, particularly with the large cap coins, Bitcoin and Ether both dropping by double digits. And up until now, there had been a rally on news of the Ethereum merge coming up. Really, since the announcement that the merge, which, as we've discussed in previous episodes, is the proof of move from ETH going from proof of work to proof of stake, that'll be going live September 15th. And in anticipation for that, there has been a lot of excitement in the market. People have been anticipating not just the appreciation of the asset, but the potential for yield as a staker in the Ethereum proof of stake network. So there was a lot of excitement, and I feel like that was pushing the market, along with some strong CPI numbers. It had gone down a bit month over month, and people were starting to think that we had seen the height of inflation, and therefore the height of possible increases in quantitative tightening here in the US. However, we came back to reality this week as the total market cap of the cryptocurrency market shed by over 20%. A lot of things lost their gains over a couple of days, specifically towards the end of the week, August 17th through the 19th. And one of the reasons for that is that cryptos are actually traded similar to high risk assets in the US, like tech stocks. So, for anyone who watches equities, they will know that the Nasdaq 100 index started to drop that day on some rough earnings reports from some companies. And then later on Friday, the jobs numbers for the US were released. So the unemployment numbers in terms of how many jobs were gained and lost, and they came in strong. Now, people would think that that's good for the economy, and it is. However, for financial institutions, it's actually a bearish signal. I know we talk about the Fed a lot, but it's very important in this in the state that the market's in right now to keep track of it, because it's so highly correlated with the Fed and with the macro environment, as we've shown in the past. Various announcements, even hints at higher interest rates can irk the market. So the strong jobs report actually showed people that the Fed is actually willing to increase more interest, or increase the interest rate, because that's one of the two ways that they control the economy. So if it was a weak jobs report, then they might consider less interest rate hikes and therefore easier monetary policy. However, because it's a strong jobs report, that indicates that the economy can actually take in higher interest rates, if that makes sense. So that caused a large drop off. And I'm not sure, do you have the NASDAQ chart available, Guilherme? Because I feel
Yes.
like that may be good for showing side by side. Give them a
Let's
moment to
do it.
bring that up.
Okay. And actually, Philip, that was a question that I have been thinking about, and I want to ask you why there has been so much correlation between Nasdaq charts and crypto charts, especially Bitcoin and Ethereum. We seen, like you said, a rally in the last days, and we have so far 5.6 percent decrease on the Nasdaq index. Why is that?
Yeah, so like these high growth tech stocks and tech companies, crypto is seen kind of in the same niche. And while people like to think that a lot of traders trade on the underlying fundamentals of things, what really happens with a lot of institutions, professional traders, is they trade in various niches and see different movements and trade based on that. So, because Bitcoin and crypto is a technology and a lot of tech companies are associated with it, think, Tesla buying it, MicroStrategy buying it. There's Bitcoin mining companies that are considered tech companies. So, for whatever reason, traders seem to associate crypto and trade crypto similar to the Nasdaq. So, tend to see similar moves in their price action. And at certain points, particularly during this bear market, there's been a very high correlation, as high as 0.98 out of a total of one. So very close movements at certain times. And this past week is no different. And what happens is the cryptos, particularly Bitcoin, move at a higher velocity than in either direction than equities do. So if you see the Nasdaq go down 5%, you'll see Bitcoin go down 10%, and then
or even more.
or even more, exactly, as the coins get riskier on the curve. There tends to be a higher correlation there. But same thing to the upside, you'll see just as big of a move to the upside too. So it's starting to really kind of show the profile of people trading it, not so much, the underlying technology, because as we said, there wasn't too much obvious news. It was more macro and other markets that were influencing it. So it's definitely an interesting metric to keep track of during this time, particularly during a bear market. We were discussing earlier, I believe once we have some more strength in the market and there starts to be a bit of a decorrelation from these equity markets, and Bitcoin Ether start to trade on the underlying value of the network and the technology, it will be a much more valuable prospect. And I believe everyone will see at these prices, it is a heavily undervalued market. So it'll be interesting though, in the meantime, because economic conditions really are driving a lot of the price right now, like I said. So inflation, fears of interest rate hikes, and other things that are kind of out of people's control are driving the market, which is why we continue to go back to that fear and greed index we refer to, just because people are, so emotional on this. And actually, would you mind bringing that up? I'd be interested to see
Yes.
what that's at right now.
Yes, I'm gonna show this fear
Mhm.
and greed index right now, because I think it's pretty interesting to show everyone how we are performing on that,
Oh,
which
wow.
is, yeah. So um last week was much better. As you can see, we had 44 points, which is just fear. Right now 28, which is quite low.
Getting into code
So
red there. It was like a little bit of fear, like some light yellow fear. Now we're like solid orange fear.
yeah, so now it seems like we're having a week with a lot of concerns in crypto, in Nasdaq, and the all the charts in general. So yeah, I to be honest, I don't see anything in crypto particularly going bad, like a few months ago. I don't know, for example, Terra Luna or something like that. But I can see a lot of uh, downs in the crypto market. So yeah, it's really crazy what's going on. Going to the Bitcoin chart right now, which is this one. Um,
I believe this is the
I
Ethereum chart.
this is oh sorry, yeah, let me go. Okay, this is the Bitcoin chart in USDT Tether. We can see last Thursday we had a 10% change in the prices. It went low, very low, and now we can see it seems to be like a pullback. Maybe we're expecting a little bit more um, rising the prices or downs. I don't know. Things are a little bit strange right now, but definitely we have a week, like I said, with a lot of concerns.
Yeah, it's funny. I was actually just looking to see the exact percentage, and I believe you said the Nasdaq fell 5% and Bitcoin fell 10%. You see that increased velocity fell twice as fast, and
Yeah.
looking at Ethereum, it fell about 13%, so a bit more. So Bitcoin tends to move the lowest or the least, and tends to be the most stable, but everything else kind of still reacts, you know, uh, a bit more hastily than it does. But yeah, I mean, other coins, like I said, fell just as much. Solana fell 21%, Polkadot 22%, Cardano 19%, Avalanche 23%, Polygon 21%, and one of the popular ones recently, Ethereum Classic 24%, topping them all. And yeah, that just shows, how further out on the risk curve those other protocols are, even compared to Bitcoin and Ethereum.
Yeah, even Ethereum, which I see as a strong coin, strong token for this year, especially because of the merge, which we can talk about more later. We saw a 92% high in the price, which is so good, which is like crazy. But last week we had this day, we like just you said, 12% down. And if you take from 7 days ago, which is so far 17% lower price. So yeah, I think not only the merge, but some news are bringing some concerns to the investors and traders. And like we are saying right now, what happens in the stock market, such as Nasdaq, is the double in the crypto market. So that's why we're seeing 12%, 20% losses in the crypto. So yeah, I think it's a week to be calm and study a lot and don't do anything like stupid. Just take care. Don't do any crazy trades right now. Just be calm, please.
Exactly, exactly. Speaking of macro, something I forgot to discuss is so at the end of August every year, there's this famous conference called the Jackson Hole Symposium, where many of the world central bank leaders come to meet in America and basically talk bank policy with each other. I know, we always talk about whenever Jerome Powell opens his mouth, the market moves. Speaking of which, he'll be speaking on Friday, and people like to read the tea leaves and what he's saying as far as what his intentions are going to be going forward. So that's a day to look for possible additional volatility for anyone that might want to set up for that day. I'd be expecting people to possibly be making moves based on what he says. And yeah, no, as besides that, it'll be interesting to see what happens at the next Fed meeting, or the next FOMC meeting, which will be in September. There's only 3 more left, and that'll be the only opportunities that the Fed has to raise rates or make changes and bring inflation under control. So it's kind of important, they have a target rate that they'd like to get it to, or they'd like to get the interest rate to, in order to start bringing down inflation. But you know, the strong jobs report showed that they're not afraid to, push it a little further in order to help get rid of inflation. So Friday will be an interesting day to keep track of, just like Thursday was last week. This macro news is very important.
Yeah, so let's just wait until Friday. And
Mm-hmm.
like I said to everyone, don't do any crazy trades.
Exactly,
I
exactly.
was, to be honest, as a like a long-term investor, as a holder, I was so excited because of this rally in, especially in Ethereum and Bitcoin. Ethereum, I think, got almost $2,000. But this week we have to be careful. I personally, I'm not gonna do anything until Friday because I want to see how the prices are gonna react to this information from the Fed. So I will be just quiet and waiting for the new announcements, because really the crypto market and as well the stock market are quite afraid of everything that's going on. And especially if you're trading, or if you're wanting to trade Ethereum, be careful, because the merge is coming up. I think it's supposed to be in the middle of September, right?
September 15th is the date. It's based on a certain block. So it's an estimate,
Mm,
as the chain creates more blocks. Once it hits this block, that's when the merge is scheduled to happen. And originally it was the 19th. Somehow it moved to the 16th and to the 15th. So who knows, it might actually move up closer. And that might be an even a big bullish signal that we need. We got that boost before on the date announcement, and then the date getting pushed up. So, keep our fingers crossed. But it'll be interesting to keep an eye on what Jerome Powell has to say this Friday at the Jackson Hole conference, because as I said, he opens his mouth and markets move. Particularly with going further on the risk curve. The meme coins that we discussed last week, Dogecoin and Shiba Inu, shed a lot of their losses, shed a lot of their gains over the last few weeks. As we talked about last week, Dogecoin, we believed it was associated with Dogecoin, but there was a blockchain dedicated to Dogecoin that was launched that using Polygon, basically, that allowed you to wrap your Doge and use it for different DeFi protocols. So basically, Dogecoin got its own blockchain. However, not long after that, it was announced by the Dogecoin Foundation that Dogecoin was not affiliated with Dogechain. So it's actually an independent project, which is kind of weird, to be honest. Like, I totally thought that it was a Dogecoin Foundation, Elon Musk. And I think a lot of people did too. They were like, oh boy, this is kind of what we've been waiting for. And I still like the idea that it gives some utility to it. And I don't know why the Dogecoin Foundation isn't just like taking notes, but apparently that was just an independent project. So I think it took a lot of wind out of its sails. And given that Dogecoin and SHIB, as we like to talk about, things are in certain niches, it's similar in crypto. There's a meme coin niche that's dedicated to these coins that really don't have much utility, but there's utility being built around it. And SHIB actually has an official chain like Dogecoin, but it's actually being done by SHIB. So it's called Shibarium. And I'm not sure of the details on that. The product doesn't have any new news, but it's just trading alongside Dogecoin. So it shed some gains as well. But I think the biggest loser recently is this new Ethereum ETH proof of work fork that we discussed last week. For those who didn't hear our episode about the merge, I mean, there's been multiple, but last week's episode about the merge, we discussed the ETH proof of work chain that was proposed by a prominent Ethereum miner. Because when Ethereum moves from proof of work to proof of stake, it won't need any miners any longer. And these miners have been buying these expensive mining machines to do the advanced computation in order to get that block reward that Bitcoin miners get and other proof of work miners get for basically validating the chain and helping it run. So proof of work basically means, or proof of stake basically means they won't be needed. That was the reason we saw Ethereum Classic pumping so much, because the same mining machines that can be used to mine Ethereum can be used to mine Ethereum Classic. And for some reason, this miner also had an idea of coming up with another Ethereum chain. I think that has the history of Ethereum, but is a fork. So it's a hard fork. So it does have the same chain and same history, but it forks off, hence the name. And it's called ETH proof of work, or ETHW is the symbol for it. It's down 62% since it contracts for it went live this month. And I mean contracts as in IOUs, because as we said, it's a proposed it's a proposed chain. It's not actually official yet. So it might not actually happen. And I guess these tokens that are being traded are IOUs. And if the ETH fork is successful, the ETH IOU will be converted into the real thing. But if not, then the remaining Ethereum IOU would be converted into post-merge ETH. So it's kind of, I don't know, maybe a win-win. People would think it's an interesting opportunity. It's interesting that it came together so quickly. Financial contracts for this, and this is what I love about crypto. If you can iterate it, you can just put it on the blockchain, and people will start trading it. You can financialize almost anything, and unfortunately, this trade doesn't look like it worked out for anyone that took it. But it's there's a lot of reasons I think that are good for it. Obviously, the miners having a place to go, as well as they got us here, so it'd be good to kind of help them out, but also not having Ethereum Classic be the only place they can go, because I don't really know anything that's on Ethereum Classic. And that's the thing, like with Ethereum, there's a lot of demand for usage of the chain. So there's demand for Ethereum, to use for these applications like Uniswap, like NFTs, things like that, to interact with the blockchain. But with Ethereum Classic, I don't think there's any applications. So it's like kind of like they're just, I'm pretty sure it's just going to get dumped after the merge, if I'm not mistaken, or just going to have so much sell pressure from the miners, because who else is going to be buying it to use it? No one's using the chain. It's just going to have miners basically getting these coins and then selling them, because there's really no, activity on it. And I think that's what analysts are saying about this new ETH proof of work chain. There's not going to be enough activity for people to demand this ETH proof of work token. So people are just going to be mining it and selling it, like with Ethereum Classic. So it doesn't really make too much sense for anyone outside of miners to be mining it. So it'll be interesting what happens, though.
Yeah, I actually saw that we had a pretty much like more than 100% high on the Ethereum Classic a few weeks ago, and all of that is because, like you said, the miners are coming from the Ethereum and going to the Ethereum Classic. But after the merge, no one knows what's gonna happen, so it's quite risky to do that.
Mm-hmm. Exactly. So it'll be interesting what happens with these ETH alternatives as we approach the fork. But for now, it's looking like the best move is really just to stay with the real thing. A lot of people are pricing in not only the appreciation and like the excitement around ETH itself, but the yield that it's going to generate, either as a staker or just utilizing the blockchain. Anyone is able to stake their coins and get a percentage of the yield, whether that's through Lido, which we've talked about multiple times on here, or through centralized exchange like Coinbase or Kraken. They actually, I think between those three, control around like 50 or 60% of all the staked ETH, which is pretty wild. It actually brings up some centralization concerns, because there's so much, which makes sense. And that's why I believe the macro and, particularly the regulatory front is so important to keep track of. I mean, as we saw with Tornado Cash, OFAC, a U.S. Government agency, basically banned Tornado Cash not too long ago, which we discussed. And the protocol has since shut down. People have been arrested. It's been a huge mess. And it's hard for these protocols to, plan for things, for these actions without the proper guidance. And what proof of work actually did, and they talk about this, Gary Gensler, the head of the SEC, talks about this, is what a lot of these tokens did that was different from what Bitcoin did is what they had what's called a initial coin offering. I mean, Ethereum actually even had one of the first ones, back in 2017, or I believe 2017, no, 2014. I'm sorry. But yeah, back in the day, they had a large offering where basically you put up X
Well,
amount of
I didn't
Bitcoin.
know that. So
Yeah, yeah,
Bitcoin
yeah.
actually had an ICO.
Yeah, yep.
I
Ethereum
didn't
had an
know.
ICO. Yep. So it was only Bitcoin, obviously, that was available. So people, put up X amount of Bitcoin. I know some people that actually participated in that, and yeah, it's really interesting. But they raised funds like that, and the Ethereum Foundation, came from it. And since then, Gary Gensler has said Bitcoin and Ethereum. Well, Bitcoin also. Let me state that it never had any sort of crowd sale. It was only been mined. So, in that sense, it's not like a financial contract. That's the worry with a lot of these proof of stake tokens. There is a thing called the Howey test, which means if it's an investment where you're expecting a return on it, it's for an independent party. And another standard that it's a security. We've considered cryptocurrencies up until this point not securities, therefore they don't have to go through a lot of the standards that, say, U.S. Stock companies do. Moving to proof of stake raises some concerns because it's people, rather than having a fair chance of mining the coin where everyone has that fair opportunity, it's kind of whoever has the most stake in the network. And you could kind of argue there is some centralization behind that. So there is a bit of tail risk in terms of the regulatory landscape moving from a proof of work blockchain to proof of stake blockchain. But like I said, I believe that that's just a tail risk. I don't think it's going to actually affect it too much. But you see with Tornado Cash, as well as the language that the SEC has in talking about cryptocurrencies, they actually, not too long ago, there was a lawsuit against Coinbase, and the SEC hopped in and actually named 7 of the cryptocurrencies they list as securities, or just declared them. Now, they haven't actually taken action on that yet, but we discussed it in a previous episode. If he's declaring it a security, he could potentially take that action on it, and that is a concern that all cryptos face, except for Bitcoin at this point, which he's explicitly said is sufficiently decentralized. So the centralization risk is something that concerns people a bit, and moving to a proof of stake does centralize it a bit more, because as I said, instead of miners all having a fair chance to solve the problem, to help the blockchain move and everything, you can get that reward. Now it's the person with the most stake, and as we discussed, Coinbase has a huge stake. So there's a lot going into this that we're going to have to consider with this ETH merge. But as we get closer, it'll be interesting to see what happens. Hopefully there's not delay. I think that's the only thing that might douse the excitement on ETH a little bit. But from what we saw, as we discussed before, the date's only been moved up so far. So I think as long as we stay on that, and the language from Gary Gensler between now and, or sorry, not from Gary Gensler, from Jerome Powell, excuse me, on Friday isn't too concerning. I think this will just be a normal dip, and we'll continue to see more excitement through up until the merge, and then after that, it'll kind of be anyone's guess. But as you said, Guillermo, keep an eye on Friday, and for Jerome Powell's speech at Jackson Hole, and besides that, I think we'll just be ranging a bit.
Yeah, I think you were saying it's a very important issue, the centralization regarding any token, especially Ethereum. And I don't know if you agree with me, but I think there are 3 um, important factors in a token, which is first, centralization; second, speed capacity of the network; and third, the security. So either you have 2 of them that are so strong and the other one is a little bit weak, or either like is always going to be one leg that is a little bit weaker than. So if you have a network that is that has speed, is quick, and is safe, you probably don't have a lot of decentralization and so on. So it's a very important issue for those who are investing in Ethereum for the long term. And I think it's very important for investors to actually read a lot about this and pay attention to what is going on regarding Ethereum, because uh, myself, I feel that I am very concerned about the merge. I was very excited, and actually, thanks, Philip, because you sent us a document last week, which was talking about what is true and what is not regarding the merge. And there were a lot of things that I thought was true, but they are not. So I got surprised, to be honest. And now I'm rethinking if the merge is actually necessary and beneficial for the Ethereum. To be honest, I don't know, but certainly it's gonna bring a lot of volatility in the market. And like you say, regarding the hard fork and so on, so we have to keep an eye on that and see what happens in the middle of September. Like you said, it can be not in the 15th. It depends on the block. But yeah, let's keep an eye on that and see what happens, because it's gonna be a huge movement for sure, for sure.
Yeah, yeah. No, and I'm glad you brought up those three points. I believe they're called the blockchain trilemma. So it's the fact that a blockchain can only achieve two out of the three pillars, I guess you would call
Yeah,
blockchain. So that's
yeah,
speed and scalability, security, and decentralization. So if it's fast and secure, then it's probably not decentralized. If it's
yes.
if it's decentralized and fast, or if it's decentralized and secure, it's probably not fast. And yeah, so
Yes.
you can
Yeah,
only have
I
three.
think from this I right now, I don't know if you agree. I think Ethereum has security, is safe, and supposedly is decentralized, but doesn't have a lot of velocity in the transactions, right?
Yeah, correct,
That's the point.
correct.
That's the point. Yeah.
Yes, and that's actually something they're going to address the later upgrade after the merge. It's called sharding, and it's a process by which blockchains scale horizontally rather than adding chains on this way. You know, they're able to store information this way. So
Mm,
it. We'll get into it a bit more when we get closer, but it basically allows the chain to process things faster and should vastly improve the scalability of Ethereum, which should, in theory, lead to cheaper fees, yeah, and faster speeds. So that's scheduled to come later. I don't believe there's an official date for that yet, but keep an eye out for the sharding process, because that's when that's scheduled to happen. Um, but yeah, it'll be interesting. It's always interesting to consider which three or which two each blockchain actually has. For example, Solana is very fast and some would say arguably secure. I don't know about hacks, but it's very centralized. There's not many validators on the network. I believe it's less than 20. So they technically are able to control the network just with that few people, which means it's not very decentralized. Whereas Ethereum, you know, is as of now as a proof of work blockchain is validated by everyone that's mining Ethereum right now, and you know that means it's thousands of times more decentralized just because it's spread out over so many more people validating the blockchain than say Solana or another more centralized blockchain.
yeah,
But
I think there's a great example in Brazil. I don't know if you heard of that in the US, the token which is called Ripple. They
XRP, yeah.
XRP, yeah, because it's supposed to be very fast and very safe, but for sure it's not decentralized because it has a company behind the token. So a lot of people in
Mhm.
Brazil are crazy, like, oh, this token is for the future, it's great, it's gonna be worth, I don't know, hundreds of dollars in the future. But I look at that and I say, yeah, okay, it's good, it's fast, it's safe, but it doesn't. I don't feel like it's an actually cryptocurrency because it has actually a company behind that. So it's not decentralized at all, so
Mhm.
I think that's a great example of a token which has two pillars of that triangle, and the other one's completely weak, like there's no centralization at all.
Right, right, and I'm glad you brought that up because that's XRP is basically Western Union on blockchain. Like it's really just for cross-border payments. That's what it's focused on, and that's what it does very well. I believe they actually um, have a partnership with several countries. I know the Philippines, I believe, is one where they're establishing cross-border payments between that and some other countries that rely a lot on remittances. Or people, sending money like to their relatives from home or from another country, because they get absolutely gouged on that. People don't realize sending money across countries is very expensive and very slow. And a lot of people that do it are people who are low income and can't really afford those fees, or it affects them disproportionately. So, yeah, the idea of a cross-border payment system that's much cheaper definitely appeals to me. Um, and I think they just marketed it as a crypto to like make it popular because, like you said, it's essentially the company. I mean, there are foundations behind certain blockchains, like the Ethereum Foundation is behind Ethereum. Ava Labs is behind Avalanche. Polygon, I know, has a parent company, and they tend to stay away or not be like as involved or as invested. Their token sales tend to be more fair, have less insiders, there tend to be less, token vesting for executives. But XRP really took that and cranked it like and really like invested everything. The two CEOs I know control like a massive amount of tokens. One has sold pretty much all of his since then. But it just shows it's an example of how when that centralization happens sometimes and there's a lot of control in the actual circulating supply, the interests of the founders of the blockchain don't align with that of the people investing in, or I guess you could say investing in the blockchain. We'll just say it. A lot of people are expecting returns on it. Not financial advice, but um, it really is a perfect example of centralization turned up all the way. Whereas I don't know if it's been hacked ever or if, it's ever had any speed issues. So it does that very well. It's just extremely centralized. And that creates other risks in terms of
and,
regulatory
and
issues and things.
there's something that I was talking to my friend the other day, and it's so amazing of uh how more tokens and get to do some trades and research a little bit more, and you see that every token that has appeared recently has a lot of problems, and Bitcoin still still makes a lot of sense. I think I was researching about that, and I think in the whole history, there was only one time when Bitcoin has been wrecked. I think it was a problem that it went um, offline for a couple hours. I don't know. It was in 2015, I think, if I'm not wrong. But the more I know the other coins, the more I respect Bitcoin.
Yeah, I mean that'd be news to me, to be honest. From what I've heard, Bitcoin's never had an issue or gone offline just because just because blocks aren't being produced doesn't mean that it's like offline, quote unquote. Like as long as there's one machine that has the network history stored on it, so as long as there's one computer out there, it's technically up. I know Ethereum had a big issue with what was called the DAO hack, where that's actually when Ethereum Classic split from Ethereum. And the reason it did is because uh, Ethereum wanted to move forward as if the hack didn't happen, which is kind of a violation of, code is law. Whereas Ethereum Classic was like, no, we have to respect code is law. So you had a camp that went one way and a camp that went the other. And it turns out, it was kind of anyone's game at that point. No one could have seen that this Ethereum would be doing so much better. But it looks like everyone decided to go with this one. And, it could have just as easily gone the other way, which is crazy. But yeah, that's the only issue I've heard of. But were you able to look anything else up about Bitcoin? Or I could be
I was
mistaken. I know there was also a yeah. I mean, the
no,
DAO hack was a major event. Mount Gox was another.
no, I am pretty sure that I can't find right now, but there has been one specific time when Bitcoin
Okay.
has. I don't think it was a hacker stuff, but it went offline. I think if it it was the only one time on history of Bitcoin, but I can't find. But I'm pretty sure there has been one issue, but
Okay.
really it was in the beginning. Probably they were like just starting. I don't know, but
Yeah, yeah. And the longer these networks are around, the more battle hardened they become, the more resistant they become. The more belief there is in them. So it's really, the longer it stays around, the more likely it is to stay around. It's kind of a self-fulfilling prophecy in that sense, which is really cool. And yeah, I think that's about all we have this week. You have anything else, Guilherme?
no, I think that's it. To be honest, in Brazil, like here in South America, the week was pretty quiet. We don't have a lot of news regarding the greatest companies like I had last week. So things are a little bit quiet. Like I said, I will be waiting quietly for Friday. I won't do anything, I swear, because I'm quite afraid of how the prices can go until Friday. So yeah, nothing new so far.
Nice, nice. Well, we'll let you get back to your day. And thank you all for watching this episode of Around the Block. Don't forget to like and subscribe to our page, and leave any comments, questions you might have. We'd be happy to answer anything you might have about the merge, about Jackson Hole, about anything we discussed in this episode or the last episodes. And yeah, as we said, we are not financial advisors. It's not financial advice, but we are very interested in this technology. We believe that it has the power to really change how money is seen, and can really create a lot of opportunities for a lot of people. So, hey, thank you for joining us, Guilherme. Um,
Thank you for your invite. I'll be always here to have these great talks regarding crypto.
mhm,
Guys, don't forget to check our link on description to get a
mhm.
free trial of Vector, which is our trading platform, a great professional platform that we use here every around the block session. So yeah, see you guys next week, hopefully. And always great to be here. Thanks, Philip, so much.
Thank you, Guilherme. And remember, stay safe and don't invest more than you can afford to lose. This market is crazy and you will lose your shirt. But happy trading and see you next week.
See you guys. Stay safe.